Hello, everyone. This is Chris Kapches, President of Chestnut Park Real Estate. And today I'm going to do two things. One, talk about the year that we've just finished, the real estate year being 2023, and also look ahead to where we're going to go in 2024. I'm going to pull no bones and start this by saying that 2023 was probably the worst year in real estate resale history. There are probably years in which there were fewer sales, but it was a very different time. But given where we are today, the fact that we only did about 66,000 sales in 2023, in my opinion, constitutes it the worst year in real estate record keeping. And the reason I say that is we did, as I said, about 66,000 sales. But it has to be remembered that we are in 2023. And in the chart behind me, you'll see sales results going back to 2011. I could have probably gone further back, but then that would be just way too much information for this presentation. But you can see if we go back to 2011, we did 89,000 plus sales that year. And if you look on the screen, you'll also see that over the period of time from 2011 until 2022, on average, we were doing close to 85,000 to 95,000 sales a year. And here we are in 2023 producing just over 65,000 sales, almost 66,000. So why is it such a terrible year, an annus horribilis? Well, because from 2011 to 2023, the population of the Greater Toronto Area has increased by almost 1 million people. Back in 2011, Statistics Canada indicates that in the GTA, the population was 5,593,000. And as we head into 2024, the population is closer to 6,400,000. So here the population has increased by 1 million people, and yet at the same time, the number of reported sales have dropped dramatically compared to 2011. In fact, you would have to go back 23 years in terms of absolute numbers to see so few sales reported in the Greater Toronto Area. So it was a bad year. The reason, of course, is interest rates. Bank of Canada started raising them in 2022. They continued into 2023. And every time they increased the interest rates, the number of sales dropped off. And simple math, as interest rates went up, affordability lessened. And as a result of that, there were fewer people in the marketplace that could afford the high cost of real estate in 2023. Hence, just a little over 65,000 sales. The month of December, we should touch on it, even though we're wrapping the year up, because there are some good news in the month of December. For example, there were 3,444 sales in December, almost 12% better than December of last year. Neither month is a great month, but having said that, at least we see something positive there. There's also some other positive factors in the December results. Firstly, the average sale price. Average sale price came in at $1,084,000, 3.2% higher than last year, which was $1,050,000. So we see the number of sales up in December compared to December of last year. We see the average sale price up a little bit. And in fact, the average sale price, again, if you look at the chart behind me, you will see has actually stayed relatively strong, notwithstanding that sales have come down fairly dramatically, as I've just pointed out. There's a reason for that, and the reason is that there's so much demand out there that demand is keeping those prices up there. And in addition to that, sellers have not been forced to reduce their prices in order to achieve sales. That may change, certainly in the first quarter of 2024. But for the time being, average sale prices have stayed strong. Another thing that was happening in December is we actually saw mortgage interest rates come down. They didn't come down because the Bank of Canada reduced its benchmark rate, but they came down because of the fact that there were so few sales. And as a result of that, banks were not able to place money with as many mortgagees as they did in the past. Consequently, the competition amongst the banks saw the rates come down in December to just slightly over 5%. You get a 5-year fixed-term mortgage now for 5.75%, and in some instances on some favorable situations for closer to 5%. And then lastly, what we saw in December is we actually saw this is more anecdotal, but some multiple offer situations for those properties that came out that were in demand in favorable, sought-after neighborhoods. So we are seeing some positive situations arising in the December marketplace, which we hope will carry into 2024. I think it's safe to say, given all the data that we have, that the first quarter of 2024 is not likely to be a strong quarter. The bank has indicated, and economists have indicated, that the bank is not likely to reduce its benchmark rate in the first quarter, but has given some indication that that may happen in the second quarter. Obviously, as the benchmark rate goes down, mortgage interest rates correspondingly reduce. More people can afford the properties that are on the market. I think we'll see incredible amount of activity taking place. Because one has to remember that even though we've gone through this terrible year, house prices have stayed fairly strong. For example, in the city of Toronto, the average sale price, even in December, which is historically a slow month, came in at $1,626 for a detached property. $1,626,000. For semi-detached property, $1,173,000. Those are very strong numbers, given the fact that we have gone through this terrible year that I've been describing. The only type of property that continues to suffer, and there's no surprise as to why, are condominium apartments. Condominium apartments were down both in terms of average sale price and in terms of the number of sales in the month of December. The answer, very simple: affordability. Generally, people that are looking to buy condominiums, for the most part, are first-time buyers. That cohort is trying to get into the market. That cohort generally has less financial strength than the other sectors of the market, and that's why that market is suffering. So where do we go in 2024? I don't think we're going out on a limb by saying that overall 2024 is going to be a much better year than 2023. But it's going to be a fragmented year. As I indicated momentarily ago, the first quarter is likely to be as slow, if not slower, than the first quarter of 2023. And the reason for that is we don't anticipate any rate reductions in the first quarter. So the affordability issue is going to stay in place, notwithstanding that the banks have reduced their lending rates a little bit. They still are very high, especially in juxtaposition to the average sale price, which I indicated are, in the case of semi-detached and detached properties, still pretty lofty out there. So the only affordable component is condominium apartments. However, we do anticipate rates coming down. There's a variety of opinions as to what's going to happen, but most economists are predicting a quarter-point reduction in the bank rate in the second quarter, and then over the course of the year, anywhere from 0.75 to 1 basis point, which would have a tremendous impact on the marketplace from an affordability standpoint. If that's the case, and it works out the way we've just described it, I suspect that what we'll see next year is probably somewhere in the neighborhood of 75 to 80,000 properties sold, which still is low compared to the chart that you saw earlier in this presentation, but at least we're starting to move in the right direction. But all of it depends on the Bank of Canada and the reduction of those rates. So I look forward to 2024 and providing you with market reports as to how the market is unfolding. And I hope that it unfolds exactly the way we've described it. Much stronger marketplace for the industry, and obviously more affordable for the consumer. So until the January report, please stay well, and Happy New Year to everyone. Thank you.